What is going on, guys? Welcome to another market update. As usual, let's get straight to the charts. So I'm not going to sugarcoat it for you guys. Things are not looking nearly as hopeful as just a few weeks ago. Bitcoin had a very violent breakdown from important support areas, showing first clear signs of weakness in this market cycle. Most notably, we retested our previous 110k support zone as new resistance and lost our 50-week moving average support zone. However, before thinking the bears finally got me on their side, I do want to note that it is not over for the bulls just yet. It's just that the bullish case has weakened. Why am I saying this? I'm not trying to be stubborn or anything, it's just that the bears have not yet managed to pull off a finishing blow. So Bitcoin is still on its feet, wobbly as it may be. You know the saying, the trend is your friend until the end. And right now, the long-term uptrend is still intact. This is because we still have a clear higher low. Obviously, this would change if we keep dropping. So what the bears need right now is either a continuation down or a lower high followed by a lower low to have a 100% confirmation of a bear market. The depressed bulls, on the other hand, need what right now seems like a miracle all the way down here. We would need to reclaim important resistance zones as supports and then push to new highs. Either way, the important area to look at is the zone all the way from 100 to 110k. That's where our previous range low, support area and 50-week moving average are, so it's a hugely important area for determining Bitcoin's action during the next months. If you're a bear, be happy if Bitcoin gives you the opportunity to short much higher. And if you're a bull, be excited by a potentially massive move to the upside again. Trends can't stay one directional forever, unless you're dealing with a worthless meme coin. And in this case, the ball has been pushed so far underwater that you shouldn't be surprised if Bitcoin got a violent rally to the upside sometime soon. As you can see, the magnitude of this crash has been similar to other ones in this uptrend. It's just that the length has roughly halved for each consecutive drop, making things feel a lot more catastrophic than they really are. Now let's look at our other charts and indicators to find some more clarity. And let's start with the liquidation heat map. As you can see, this chart just confirms that the major area to retest is the 110k area or so. There's a lot of liquidity building up there and a lot of shorts would get liquidated if we got past that level. The long side liquidity, on the other hand, has been mostly taken out. Most high leveraged longs have already been completely destroyed. And this is just new liquidity that is building up over here. Next, let's look at the DXY versus Bitcoin, and the dollar has been doing exactly what I've been predicting. It has been having a pretty significant rally over here, similar to many of the other ones in previous cycles. And I do hope that the next move is going to be to the downside again for that final low, which would hopefully coincide with a more bullish, high-risk environment as well. As most of you probably know, quantitative easing is starting to ramp up again now, and this will apply more downward pressure on the dollar. Next, let's look at the unemployment rate. And as you can see, we finally have some new highs for the unemployment rate. But it's not too bad just yet. Once we get above 5% or so, that's when things usually get out of hand and we may even get a recession if the Fed cannot keep things under control. And when looking at the federal funds rate, you can see that we're starting to come down again here. And the danger zone is really the bottom half of this descent, which has very often produced recessions. So we have to hope that this won't happen this time. Next, let's look at the short-term holder realized price. So this is showing how much money new investors have really lost over here. And Bitcoin typically has a tendency to rebound if we get too far below this short-term holder realized price over here. And this next news story is telling us the same thing because we have Bitcoin flashing a reliable bottom signal. Bitcoin may have finally hit the kind of exhaustion zone that has marked every short-term bottom of the past 2 years. Data from CryptoQuant shows the short-term holder SOPR, a measure of whether recent buyers are selling at a profit or loss, fell to 0.94 earlier this week, while prices hovered between $80,000 and $90,000. Any reading below 1.0 signals capitulation from newer entrants. Historically, these flushes have tended to coincide with local lows and sharp recovery windows shortly after. The pattern is familiar. Similar SOPR dips in early 2023, late 2023, mid 2024, and again this month all showed short-term holders realizing losses into deep sell-offs, followed by stabilization as liquidity rotated to stronger hands. CryptoQuant described the latest reading as loss realization rather than structural deterioration, suggesting the move is a function of aggressive unwinding rather than a breakdown in long-term positioning. For our next and last piece of news, we have Texas taking a key step in building state-level crypto reserves. According to officials, the state has spent $5 million to purchase BlackRock's Bitcoin ETF, even though the Texas Strategic Bitcoin Reserve Plan is still in preparation. The state recently solicited industry opinions on compliance plans for establishing a Bitcoin reserve and allocated $10 million through legislation earlier this year. After completing the final procedural steps, Texas is expected to become the first U.S. state government to seriously launch long-term crypto asset investments. Let's get back to the charts now, and let's start with M2 money shift. And it's pretty hilarious how much the price action has actually diverged from the money supply over here. As you can see, the money supply is still pretty strong. It's consolidating and dipping over here, but Bitcoin fell off a cliff following traditional markets. So the potential is still there, technically speaking, to rebound higher because the money supply is still really elevated. But as you can see, the correlation has really declined over the past months. Next, let's look at the S&P versus Bitcoin. And as you can see, Bitcoin is still proving that when the S&P drops 5%, Bitcoin drops 20%. Because Bitcoin is still considered to be a much higher risk asset than the S&P. So if the S&P is starting to show some strength again here, then Bitcoin also has a nice chance of rebounding as well, and much more aggressively than the S&P. Next, let's look at the crypto fear and greed index, and as you can see, this recent drop over here brought us to completely ridiculous levels, pretty much unheard of levels. So it's very, very unlikely that Bitcoin will stay at these fear levels for a long period of time. When we've dipped into this area over here below 20 or so, we've always had a sharp rebound, at least for some sort of bounce. And when looking at Google Trends, you can see that interest in Bitcoin is still remaining relatively elevated compared to September lows or so. And they're also higher than they were in June. So this is quite interesting. Could this signal some sort of trend? Typically, interest in Bitcoin drops a lot when it crashes, but it didn't really happen this time. Something really interesting emerges when looking at Bitcoin's dominance, because typically when Bitcoin crashes a lot, its dominance increases a lot as well because confidence in altcoins declines. But when looking at the chart right now, you can see that actually altcoins have been holding up pretty well. I'm not saying that this is guaranteed or anything, but this still leaves some potential hope for a continued altcoin season. But we'll have to see about that. We need a little bit more confirmation. Since ETH is one of the biggest altcoins, you can see that ETH has been holding up beautifully as well. And this is one of the prettiest looking bull flags I've seen. Obviously, again, we need confirmation. And when looking at the Bitcoin monthly returns chart, you can see that October and November have been absolute bloodbaths. But we can still hope for a green December. The last time we had a red October and November was in 2018 during the bear market. And that also meant that we had a red December, but that was only one data point. We don't have enough data to show that this is an actual trend. So I'm still hoping for a green December. So what am I currently thinking about Bitcoin's price action? Well, we know for certain that this cycle is going to look at least a little bit different compared to our other ones. Either we're going to have an unpredictably low peak and mild bear market, or we're going to deviate in terms of periodicity, meaning that the 4-year cycle will be slightly extended. I'm personally leaning toward the second option. I've been talking about a potential early 2026 top for a while, and I still don't think it would necessarily violate the general pattern of 4-year cycles. It would just mean that Bitcoin is a little bit less mathematically precise in that regard. That's why we have always mentioned a 3-month window or so, and that would also obviously mean that the October peak would have been in this range as well, so that is also a risk to consider. A massive deviation by having a peak later next year would obviously change things, however, proving the extended cycle theorists right. So I get that the sentiment is abysmal right now, and some in our Telegram group are completely convinced that the bear market is already here, but that is also the majority retail opinion right now, which is rarely correct. We'll have to see whether this will be the first time we enter a bear market without a real euphoria phase. Either way, our objective was always to give you guys a much more grounded and realistic top prediction compared to all the other guys predicting a 300k, 500k, or $1 million Bitcoin this cycle. We only have to see how much more grounded we should have been. I've been trying my best to calm you guys down. If you're convinced that the bear market is here, it might be a good idea to use a weighted DCA approach here, because there's also no guarantee that we will reach the typical 60% deviation from the power law if the upper part of the oscillation is lacking as well. The current rally could also be an opportunity for you to exit if you're convinced that the bear market really is here. The general power law trend is still holding very well though. Anyway, let's see if we're at least going to get a very nice rally here before we can determine the next move. We are already seeing the potential beginning of one, so fingers crossed. By the way guys, I recently built myself a new PC again after many years, so I can record 4K videos now without significant lag. I already scaled up a lot of the UI elements to make things more legible for you, but let me know if I need to make things like text even larger. From what I can see right now, I may need to make things even larger for all of you guys watching my videos on your phones. Also, we had a great time at the Bitcoin Amsterdam conference and met so many bright Bitcoiners from our community. It was a pleasure to get to know you guys and see you in person. I'll also share some clips from Giovanni's speech in the next market update. This is Saverio speaking, and as always, thanks for watching. You guys know my stance on the importance of self-custody. However, there are situations where you need to use an exchange for trading or as a crypto on and off ramp. There are also plenty of people who should still reap the benefits of owning Bitcoin, even if they don't have the technical expertise required for self-custody or exchange-based trading. This is where today's sponsor, Caleb & Brown, comes in. There's nothing more infuriating than having your money stuck on an exchange and being met with an AI chatbot instead of real customer support, which is often lacking as exchanges try to cut costs. Caleb & Brown, based in Australia, solves these problems by storing your crypto in cold storage, eliminating hidden fees, and assigning you a dedicated broker to assist you personally. You can even call your broker to execute a trade for you while you're relaxing on a beach. That's how easy it is to use Caleb & Brown's services. Use the referral link in the description to sign up now.